Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with Tim Stenovec and Carol Massar. Welcome to our audiences across all of our Bloomberg platforms. Carol, you look vexed. What are you looking at?
I don't know. I'm just kind of looking for something to talk about because
Wow. I appreciate the honesty, Carol. I like that.
Carol Massar.
It's like once again, right? We have this day where
these 2-day work weeks are tough, right?
It's a little tough getting back in the groove. No, but I think it's just an interesting trade where we did see a rally. We really kind of fizzled. You do see rates kind of holding on to some of their highs of the session. I just think, we got to just kind of wait to see what we get in terms of the Fed's next move and direction and kind of guidance, if you will. And that's a long wait, a month away or so.
It is, and a lot can happen between now and a month. We have, another employment report that we hear about. We have more inflation reports, but I'm still obsessed with today's trade and the way that the S&P 500 was up as much as 1.3% earlier in the session. The NASDAQ was up more than 1.6 earlier in the session. And we're looking at a day that's going to close pretty much, fractionally higher, perhaps, or even lower if it moves lower in the next few minutes.
I like what our last guest just said, which is that people that she talks to, her clients, no one's obsessed with recession anymore. I mean, Romaine, you, Carol, and I are, but their clients are no longer obsessed with that. It's more about looking ahead and making sure that they, catch up to the gains that they might have missed out on.
Yeah, I mean, and look, you get to a point too where we should point out that there are some seasonality effects going on right now, particularly when it comes to volume in the middle of August, where a lot of folks, of course, are away from their desk, and you don't have as many catalysts. I mean, earnings season is wrapping up, and as we pointed out, it's still a ways away until we get that next Fed decision. So you hang your hat on the economic data that we got this morning. There's certainly some positives in there, and maybe that was a catalyst for the rally that we saw to start the day. That rally, unfortunately, did not hold up, at least not to the extent we thought it would. The Dow Jones Industrial Average is going to stay in the green, but only by about 0.1%. The S&P 500 only in the green by 1 point here on the day, while the NASDAQ Composite also in the green, but only by about 0.1%. The Russell 2000, which had a pretty good run earlier in the day, is going to close in the red, down 0.4%.
Yeah, I got to say, I'm thinking of what Aaron Kennan over at Clear Harbor said to us, and he's like, if you think we're going into a recession, you got to keep in mind that the S&P multiple tends to bottom around 14, and right now we've got an S&P that's at 20, and so if you think that that's the scenario, then we're going to have to see some kind of market correction. But again, as you said, Scarlett, there's less recession worries at this point.
Less recession worries. We have modest gains for the day, but when you look at the industry group performances, the gains, at least among industry groups, are capped. 0.6% for consumer services, and that's really your hotel companies, your casinos, so Wynn Resorts leading the way there. Media entertainment, that's Disney, lifting that group up by 0.5%. On the flip side, you look at the biggest losers, off by 1.6%. Consumer durable and apparel, that's Tapestry, following its gigantic purchase of Capri.
Exactly, which kind of sets me up really nicely for my individual gainers. So thank you for that, Scarlett.
Sure.
Let's go. You're welcome. Or thank you. All right, so let's go to the individual gainers. Capri is obviously on that list, up 55% in this session. I think we're up almost 60% at its highs. We know the news. Tapestry is buying Capri, $8.5 billion deal. Capri, owner of Jimmy Choo, but Michael Kors is really the bulk of the industry. We were talking with our BI and BN reporters on this, and really Michael Kors is the core business, no pun intended there. And there's some work to be done there, and it might be a 2-year strategy play here for Tapestry. So investors might need to be a little bit patient. Disney, number one in the S&P 500. We broke their earnings last night. Stock was down. Then it turned around on that analyst call. So it really did bounce around a bunch. But ending the day up almost 5%. Company talked about capital spending and outlays for movies and TVs coming in lower than projected. Some of those savings due as a result of some of the strikes in Hollywood right now. So anyway, and we should point out fiscal third quarter profit did beat, revenue did miss, but definitely a standout in today's session. And AppLovin, ticker is APP, it's up 26% here at the close. Mobile gaming company, we're talking about a $12.8 billion market cap to its highest in a year. The company reported second quarter results, beat expectations. They also gave an outlook that is seen strong by analysts. The stock is up around 250% year to date. About 8% of the float is shorted, but man, quite some outperformance there.
Well, we got quite some underperformance as well. Some notable decliners today do include Tapestry, finishing the day down 16%, having its worst day since March of 2020. We all know the story. We've been talking about it all day. This is how investors are reacting to it. Let's talk about what happened in the auto sector today, because General Motors and Ford both taking a hit. GM down 5.8%, Ford down 4.5%, as a result of investors being concerned about potential labor strikes, the effect that those could have on the companies. Bloomberg did report yesterday that new contract demands made by the UAW could cost more than $80 billion, add $80 billion, I should say, to each of the biggest U.S. automakers, just their labor costs. So this is how investors reacted today. And then Krispy Kreme, fair to say this is one of my favorite tickers, DNUT, down 14% today, 13.7%.
It's one of your favorite
What
foods.
is that, D-nuts?
Yeah, D-nut. Yeah, it's like down.
Do you get it?
Yeah, it's a donut.
Donuts.
It's a donut.
No, it's a donut.
Having its worst day since it went public back in 2021. Net revenue, adjusted EBITDA trailed consensus estimates. EBITDA margins contracted. They did also say that results here in the U.S. were marred by as a result of an issue with a third-party point-of-sale system. But I just think people aren't eating as many donuts as.
Did you see their profitability?
Yeah, it contracted.
Yeah.
Yeah.
Do you know how much it was, Tim?
No, I don't. It's not
$233,000.
small.
No, depends.
Yeah.
For a donut company, I guess that's big. I don't know. Are there any?
Is that per donut, Romaine?
I don't know.
Dunkin' Donuts.
Is that per
Don't
donut?
listen to me. I don't know what I'm talking about. Let's just check in on the yield space here, because, guys, this is important because we spent so much time talking about these big auctions that were coming this week. He had that 3-year auction on Tuesday, actually went well. A 10-year auction on Wednesday, it actually went well. 30-year auction, not so much here. In fact, a real sign of weak demand there on the longer end of the curve here, showing that people are a little bit of concern about going too far out on duration here. And then you saw, of course, a big change in yields on the basis of that, 9 basis points higher on your 30-year yield. Similar move on the 20-year yield, as well as the 10-year yield, as well as a 5-year yield. So this has now gone from being a short duration story in terms of the moves and the volatility that we're seeing in the bond market to much more on the longer end. And you wonder what the setup means when it comes to what the Fed does next. If this is a bet that the Fed is not done, if this is a bet that economic conditions are deteriorating, then I guess not only are you going to get a repricing in the Treasury market, but maybe potentially in the equity market as well.
Right, which goes back to kind of what Aaron Kennan said to us too. If you believe there's going to be some kind of recession, then this PE on the S&P 500 just doesn't make sense, Scarlett.
It doesn't make sense. I just want to jump in here because Capri Holdings, of course, the target of Tapestry's M&A. This is the company, as you were saying, Carol, really Michael Kors, has reported earnings. And first quarter earnings per share of 41 cents, a big drop off from a year ago, which was $1.40. Revenue in the period was $1.23 billion, slightly higher than what analysts had anticipated, which was $1.2 billion. And adjusted EPS did beat the consensus by about 3 cents. The big question, of course, is for Tapestry because it's shelling out $8.5 billion in cash, which means it's taking on debt. And Moody's has placed the stock on review, or I should say the company on review for a possible downgrade.
But this is like such a turnaround story. I mean, you talk about, what was it? You're talking about double-digit declines in the Michael Kors brand in terms of sales. I think Versace was down 5 or 6%. Jimmy Choo was the only thing that held up here. And I guess, it raises a lot of questions as to what Tapestry is buying and more importantly, can they actually revive brands that are well known but certainly have lost their cachet.
I also wonder about the so-called synergies that they're saying they're going to have, which essentially just means job cuts, right? $200 million of
Is
cost
that where you
savings.
were the last 6 months? You were just like in MBA school or something?
I didn't hear what you said.
The only thing that they would say is, when we were talking with the analysts, is that Tapestry, you think about the Coach brand, they were having some problems for a while, and they've really reinvented them. They're still having some problems, at least according to our team here that we talked to with the Stuart Weitzman brand. But if they can somehow take Michael Kors, which has become a little bit saturated in terms of the marketplace, if they can do something to revive it, and I agree with you, Romaine, that Jimmy Choo, I feel like, had a lot more cachet a few years ago.
During the Sex and the City days.
That's when I bought my first.
Yeah. Well, I think part of it also is that Jimmy Choo and Versace gives them an entree into Europe, and that allows the new Tapestry to better compete against LVMH and Kering and Richemont and all the other European luxury brands.
Do you know how many brands LVMH has? We were having this conversation earlier about whether this was even a fair comparison. I didn't know that. 75.
Yeah, it's incredible.
Yeah.
75.
See, I don't think it's a fair comparison.
Yeah, and
either.
you're talking what I guess the Capri
Tiffany,
Tapestry kind tie-up is like basically a dozen at most. And even like Kering isn't really that as many, I should say, as LVMH.
I just want to know, do any of you wear manprees?
What? I don't even know what that is.
You know what it is? Didn't you talk about this?
It was on air a couple weeks ago. Apparently, it's like
Sounds
the new
dirty.
thing.
No,
The new
it's
thing
like
to wear to the beach.
Man-prees?
The new thing to wear to the beach.
Guys are wearing manprees.
Guys are not.
It's the new
wearing
thing.
man-prees.
Come
No
on,
guy.
you're
These
among-
guys,
Romaine,
these
you're
guys are
among
not wearing
friends.
manprees. How's that? These guys are not.
All right. From Capri to
Gosh,
man.
you travel in a different world than me.
I
girl,
guess we
Massar.
all do.
That's how things work out in Jersey.
Sorry. All right, we got to run. Guys, that's a wrap. Our cross-platform coverage,
It's
radio,
a new one.
TV, YouTube. Check them out. You might like. And of course, on Bloomberg Originals. We call it Beyond the Bell. We'll see you tomorrow, everybody.